So I have to ask you, Raeann. I know it was yesterday, but President-elect Donald Trump used the New York Stock Exchange. He promised more tax cuts. He said he would try to end wars that have become very expensive for the U.S. government. Had a strong showing from U.S. business leaders. Why do you think markets close lower?
I think there's just been so much of a positive move up. There's been so much momentum that we've seen, really over the last few months, but especially since that election that we saw in early November, that, the markets are just taking a little bit of a breather, digesting everything that's going on, even though all of this really is positive news. And we are still seeing a lot of, positive expectations for what we may see in the next 12 months with the new administration.
Yeah, certainly since the election, we've seen the Trump trade and, the president-elect basically promising to do things that I think a lot of people who are investors are hoping he'll do, and then still the markets close lower. Interesting turn. One thing we do have to watch is that rise in bond yields. So CPI came in line. PPI was a little bit hot, but it's been a pretty sharp move to the upside to those yields. How do you see that impacting the markets on this last trading day of the week?
Yeah, I think it's to be expected. Market was pricing in a lot of rate cuts for next year. Now we're seeing, this concern about whether or not inflation is going to resurge. So seeing bond yields staying a little bit higher, I think is not unexpected. And I think that is something that will continue as, we see fewer rate cuts coming. So, market looks like it's going to move up today. I think we're shaking that off a little bit. Like you said, the CPI came in line and PPI was a little bit hot, but we still will likely see a rate cut next week.
All right. Anything to make of consumer discretionary closing lower, like 0.75% lower yesterday? It's really, we've seen so much of consumer discretionary stocks leading the market and really being part of this rally. Is that a concerning sign at all that yesterday, even with, the president-elect's kind of sending that signal to the market, we're seeing that area kind of hit?
Again, I don't have concern there.
Okay.
I think that's a great place to be right now. I think, we're expecting to see more market breadth and rotation, discretionary with, the state of the consumer being so strong right now, consumer confidence picking up, spending staying strong. Expect that the companies in that sector should continue to do well overall.
I know you said you're also looking for opportunities outside of equities for some of your clients in private credit and private equity. Of course, not everybody has access to that. So we're going to show a board of some alternative asset managers. Would you play the private credit play and the private equity play that same way, like buying a KKR or a Carlyle, or is it strictly for you with your clients and people you advise directly investing?
We do have some exposure, to the publicly traded stocks as well. Those have been incredibly places to be, and several of those companies have really outperformed the Magnificent Seven. If you look at, the year-to-date period, they've had extremely strong returns. And I think a lot of that is because of the demand in that area. We do focus primarily on the private side, investing in private funds in those areas. But these companies are a great way to play that space as well if you don't have access to invest in the private markets.